You're just joining us, it's time for our conversation. Now, let's start with our first conversation. Ajoke Toluwaloju of Meristem Securities is joining me from Lagos via Skype. Let's chat about the company's results that have been released so far, at least in the last few days. The banks seem to be on top. I did tell you earlier that we're seeing results from about, 4 banks. Their after-tax profit are in the excess of 400 billion naira. Ajoke, if you're there from Skype, welcome to the show.
Hi, Nan.
Hi, how are you, Ajoke? How are you doing today? How is Lagos?
Good, thanks. How are you?
I'm fine. We're there. Now let's get started with the program. I can't but talk about this. Zenit Bank is leading the pack of 4 banks. And 4 banks recorded about 431 billion naira as after-tax profit in 9 months, we must say. That's January to September, isn't it? What are your views concerning these earnings that we're seeing from the banks?
Oh, okay. So far during the year 2019, we've actually seen the CBN tries to increase regulations for the banks, trying to make them basically increase the credit flow to the real sector. Yeah, we had an increase in the minimum loan deposit ratio of 60%, which so many banks, including Tier 1 banks, then UBA, First Bank, and the like, failed to adhere or meet compliance with, and they got penalized. And then swiftly after the 60%, the CBN revised this loan deposit ratio to 65%. It has actually been a tough quarter for the banks from January up to September 2019. But then we've seen the banks actually exemplify resilience despite all of this regulation. We saw Zenit Bank, the profit after tax of Zenit Bank at 2.2 billion for UBA, for First Bank, and all of that. Although the top line there was really slow accretion to the top line owing to the lower interest income, as these banks try to really give out loans to credible obligors. The major reason for the improved profit after tax was due to the fact that most of these banks tried to cut down their operating expenses, which significantly boosted their bottom line.
Okay, let's talk about the non-performing loans, because when I was also taking a look at those results from the banks, Ajoke, are you still there? When I was still looking at those results from the banks, I could see that it's like the non-performing loans have declined. Do you have anything to say about that?
Yes, there has been an improvement in non-performing loans. I mean, from the start of the year, it seems like all the banks set out to ensure that they really had a mop-up or rigorous cleaning of their loan books. They had to ensure that the quality was top-notch because, I mean, the prevailing macroeconomic factor, the economy at large, is not attractive or encouraging enough to give out loans. So they try to ensure that the loans that were already existing, they made more efforts to restructure, to improve the quality of the loans. So far, they have, all banks, basically, mostly the Tier 1 banks, recorded significant improvements in their non-performing loans. Important to note is First Bank, they had, as at full year 2018, they had non-performing loans up to the tune of 25%. And then so far, they made significant efforts at improving such, and now, as at 9M 2018, we can see that it's now at 12.5%, which is mostly like half of their position as at 2018. So most of these banks, they went all out to clean out their loan books, even included or brought in law to enforce payments and obligations on the part of these obligors to meet up with their expected quality standards of loans. So most of these banks, all they have tried to do, since they could not give out loans to credible people, they tried so hard to clean up their loan books and then release profitable or impressive figures.
Of course, with this kind of results, we're seeing that the banks, because the banks are just in the news, the banks are creating I would say, value for their shareholders. But even with this result, does it really reflect the wider economic space? What is really happening with a GDP growth of about 1.9%? The banks are still making a lot of profits.
Oh, okay. I would say they're making a lot of profit, not basically because there is so much increase in their revenue or top line compared to their standards in 2018, but because they have been able to maintain a tight hold on operating expenses. So, particularly for interest income, I mean, the yield environment has been really, really low. It speaks to the perception, investors' perception about the economy at large. They have mostly been trying to boost their interest income line using interest earned from investment securities that they had bought while the yields were really, really high in 2018, at the end of 2018. The major part of their top line revenue was enhanced by their non-interest income line. So we see fees and commissions income and other banking charges that sprang up due to increased transaction volumes. So really, it is not because their profit is not because the economy is doing so well. If we would want to assess the performance, the economy at large using the bank, they will actually look at their interest income, which has actually been reporting declines so far. It speaks to the fact that although the banks have money to give out to people, but there aren't like quality obligors, quality people that they could lend this money out to without it impacting their non-performing loans adversely. So really, interest income has been declining, their top line has been declining, but it has been supported by non-interest income. Like I said earlier, the fees and commissions, the remittance fees, and all the charges that the banks have been able to accrue to themselves. And then also a tight hold on operating expenses. So we actually saw most banks either report really little marginal growth in operating expense or marginal growth in operating expense, basically to improve and boost their bottom line, which is why we're seeing impressive bottom line figures as at 2018.
Let's talk about other companies too. Companies such as Guinness, companies such as Cadbury PLC. For Guinness, we're seeing the 2020 first quarter unaudited being released. What do you have to say about that?
For Guinness, Cadbury, mostly goods in the companies in the consumer sector, the performance has actually been really, really appalling. For Guinness, we actually saw about over 100% decline in their profit after tax compared to their previous corresponding period. This has mostly been impacted by the tariffs, increased taxes on their goods that the federal government has imposed recently. We have most of these players try to absorb the tax impact on their products by not pushing it out to consumers. They found out eventually that, I mean, it's just too huge for them to absorb, and then they had to pass it on. Now, passing on this additional taxes to consumers would, of course, result in a decline in the purchase of these goods and services. I mean, if the prices were high, with the current disposable income available to the regular consumer, he would opt for really lower prices, mostly goods and services that are unbranded. So we are seeing consumers, the average consumer, moving from branded goods, which are produced by companies listed on NSE, to unbranded goods and services, of which these companies are not listed on NSE. So we are seeing a shift of more of that, and this is significantly impacting their top and bottom lines for companies listed on NSE, which is why we're seeing Cadbury and Guinness performing so bad.
I think that's a very valid point you brought in now in terms of the consumer behavior right now, not going for perhaps the necessarily known brands such as the Guinness and the Cadbury or perhaps Nigerian breweries, and they're going for other, perhaps even smaller brands that are coming out, perhaps smaller brands of made in Nigeria that are not even as expensive. Because once you even look at those results, you say, are Nigerians not drinking beer again, or they are not taking some softer drinks, so to speak. But I think, Ajoke, we'll leave it at that. I'll chat with you some more sometime. Thank you for joining me.